December, when they raised the funds rate to 240, the 10-year was at 3.25, and everyone thought it was going up. I think if they had known, the fact that the 10-year dropped to 240 is a game changer. Had they known back then that the long bond would be at 240, I don't think they would have raised in December. It makes no sense for the Fed funds rate to be exactly the same as the 10-year bond. So it should be lower.
You think
it should be 2% or so.
You think the Fed made a policy mistake in December, and now it's going to be harder to unwind it now?
Well, I mean, they can unwind it. I mean, I don't think,
But you do. But you said yes.
Points on the short end is fatal, but I think it's a...
You think they did make a mistake?
I thought they made they made a mistake of raising it, and then they made a terrible mistake in the statement that came out that sort of implied they were going to keep on raising it in 2019, which they walked back immediately when the markets collapsed. But the move itself was a mistake. If they had known the long bond was 240 in March, they would have never raised it to 240. They wouldn't have flattened the curve. They know the history of flattening the curve. So my feeling is, oh, my God, we thought the long bond would be 350 by now. We'd have 90 basis points, 100 basis points. We're not flattening the curve. Turned out, after the fact, they flattened the curve.
Yeah, so they made this big dovish double down now. So what's a stock investor to do?
Well, I mean, the bond being at 240 is a boost, but, take a look at growth. This first quarter, it's going to be about 1%, maybe 1-2. I mean, that's a third of what we had last year. Is it really are we sure it's going to pick up in the second and third quarter? Are we really going to get, 2%, 2.5%? I mean, I think earnings are going to be the challenge. I mean, I agree with what Steve said. I think that earnings expectations are still too high. I mean, we brought them down from double digits down to 7 or 6. I don't know what they are now, 8. My feeling is it's going to be tough meeting those. And we just got 2020, by the way. I don't know if you looked at 2020, crazy, 13% up from, 2019. That doesn't make sense in the economy either. I'm not talking about a big break in the market because if the long bond's at 240, again, where do you go? But let me tell you, some people said, I'm going to cash, 240. I'll take 240 in cash. No maturity risk, higher than the dividend yield right now in the S&P. In this sort of a world, that ain't bad. That's why I think if the Fed went down to 180, 190, they'd get a little bit of a curve boost over there, and things would be better.
I'm
not saying this is fatal. I'm just telling you what the situation is.
But are you saying that the gains are in for the year at best?
I think we're maybe up 5% the rest of the year. Most of the gains are in. Maybe a slight upward tilt. I think the market's staying up because I think everyone expects no one wants to be short when Trump announces a deal with China. And that's clearly a deal with China is priced into the market. So everyone's scared, I'm not going to be short because the market's going to shoot up 5, 6, 7, 8%. But then I think the bloom is off the rose. I think then, let's look at earnings. Ooh, are they really up? Ooh, okay. And enthusiasm is going to wane at that point. Again, you're not going to crack the market when the long bond's at 240, but it's going to be hard to move really forward in a major way.
Professor, I'm confused by what you just said. You said at one point that the China deal is all in the market, but then you said it could move up
about
5 to
80%,
7%.
80, 90.
Okay, got it.
And it will pop. It will pop. We're going to get a 5, 6, 7% move if he says we made a settlement.
I agree. But here's
and then everyone's going to say, okay, now what about earnings? But that's why people are afraid, I think, to be short because they think an announcement's coming on. And as a result, I think the market is sort of being held up by the fact we're going to get good news from Trump on this trade deal. And I think there will be good news. Yeah, oh, my goodness. I don't want to be short through that episode.
No, but you're also suggesting...
let's forget about earnings.
You're suggesting that you would fade the pop that you would get from a trade deal because that would be the final part of the puzzle.
I would sell the pop. I would say if I'm a short-term trader, I'd sell the pop on the trade move, in my opinion. And you're going to get a pop. I may be wrong on that. As you know, I'm usually an advocate for long-run investing, but everyone's interested in the short run. I think that might be a trade on that pop.